to it. I, I, I open it up right here. What's going on, man? How y'all doing? How y'all doing? I want to say how y'all doing. Um, we are getting ready to do a pop up, if you will, weekend chart prep and Q&A session. Before we get started with the chart prep, does anyone have any questions or anything they want clarity on, or you know anything like that before we get started on the chart prep? Yesterday,
Hey Tim, Marco, how are you?
what's going on, Marco?
So the question is, I put a chart up in chart prep. When you get a chance, you don't have to do it now because it's gonna take some time. So just
No,
looking to make
no.
sure that
You put it where you put it at. Let me go find it. Where you put it at? I'm
class
sorry.
participation.
Class participation. Okay.
Yeah.
All right.
Just make sure I'm using the terminology correctly between well, obviously accumulation is accumulation, reversal, retracement, and distribution, manipulation. Am I using that correctly?
Okay. Let's check it out. And another thing, Marco, like if you want something to get my attention, right? Either tag me in it or put it in questions for Big Spider right there. Like if you want to get my attention, like either tag me in it, or if you put it in here, in this one here, and I see it in there, I know you want my attention. But if you put it anywhere else, just tag me in it, and then I'll know you want me to look at it. Like you need me to you want draw attention to it. That way it ain't just I see you posted it like at 3:30. You know what I'm saying? So
Okay, thank you.
yeah, let me see here. All right. You say you want to know if you use the terminology right for as far as. All right, let me read what you got here. Start.
Reversal. Yeah.
All right. Starting on 6:19, 6 p.m. We had accumulation through 3:45 a.m. 9:20. So 6:19 to 6 p.m. All right, and you said through 3:45 a.m. All right, that was over this area here. Okay, yeah, that sounds good. We started to manipulate down into 7 a.m., which took out relative equal lows for the range. All right, so we started coming down 7 a.m. All right, took out equal lows for the range. Okay. At 7:15, it reversed and took out relative equal highs for the range. At 8:45, it distributed to the opposite direction after it took out the range high and low. Right, so we came down, came here, and then you said relative equal highs, then distribute down, take it out. And 11:45, it created a new low of day range. On the way down, it created a Cibi. Okay, the same candle was also started a busy on the reversal. Okay, here, there.
Actually, I can see that that's wrong.
Okay, that same candle. So we got the Cibi. Right, that same candle
Yeah,
was also
I was talking about the white candle, so that's actually wrong.
Okay, this one here. Okay, and we came back up.
Yeah, the bottom one.
All right. It also created a balanced price range. Downside, right? Okay. It also created a balanced price range on the downside. Sibi at 1 p.m. Can't see the one. I can't see the time, so I'm thinking it's over here somewhere. 1 p.m. I'm thinking it's got to be up in here, maybe, because we got 12 here. Or maybe let me see. We got
Right where your cursor was should be 1 p.m. where
here
that busy was created. That should be around. Yep, that's what I'm
right
talking
there.
about. The balance price range there. When it
Oh,
went
I see
back up.
Sibby balance price range. Okay, so all right, so all right, and then let me see. Let me finish reading this and we'll walk through it. 1 p.m. comes down to the balance price range and the 15-minute fair value gap. 15-minute bullish fair value gap. So up in here, in this area right here, that's where the fair value at. See, I wish I could see the times there. So, but this would be a fair value gap there. These are 15-minute candles. Yes.
Yeah, that's marked right there. If you see to your right, it's marked plus 15 minutes.
Yeah,
So
this
that's
will be a
exactly
15-minute. So this here is when you saying at 1 it came down to this area here. When it said at 1 p.m. it came down. Yeah, okay, so 1 it came down to here. All right, got that. And then comes back 1 p.m. price comes back down to the balance price range 50 and gets rejected. Go back above the new day opening gap to create a new high of the day. All right, boom, went up to the new high. So okay, this was the pull back around 1 that went up there. Okay, so as far as terminology, yeah, I don't have any issue with it, right? Because you said it was accumulating here. That's fine to say accumulating or consolidating. It's the when you're consolidating, you're accumulating. And, it's just the terminology that make sense in your mind. That's fine, right? You said it manipulated down, then it went back up, right? That's fine because you was accumulating here. You went down, and then you went back up and took out the high, right? So that'll be accumulation, manipulation, and then you distribute above these highs, right? And how do you know that it distributed above these highs? Because you had a pullback right here. Once it went above them highs, you had a pullback there, right? So that is accumulation, manipulation, and then distribution above them highs. Went up there, boom, and traded off. So that the terminology about that is fine. I don't see no issue with it. It makes sense in my mind, so I have no issue with it. The only thing that that's this right here, I wouldn't call it a balanced price range because of how it's coming across here with this white candle. It's more so of a balanced price range because we got sell side delivery and buy side delivery there. Now this SIBI and that BISI over, if you say okay, this is a balanced price range based off the how you got this SIBI stretched through right there, right, and calling it a balanced price range based off that, I would take this annotation here with SIBI / balanced price range and put it here on this one right there. You see what I'm saying? And instead of marking out if you want to count it as like a balanced price range, right? Instead of marking out the BISI, right? I would just take this annotation there and put it on this SIBI right there, right? Let me do this right here. What's this? The NASDAQ? What day is this?
Yeah, that's the NASDAQ.
What day is
That's
this?
the December NASDAQ. That's Friday, the 20th.
Okay, Friday. Okay. All right, let's do this.
So
right
why
here.
would my SIBI / balance price range be valid?
Yeah, that it's it was a SIBI. It's a valid SIBI, but as far as a balanced price range, the way you got it marked, it's not a balanced price range for the way you got it marked. All right, and now I'm gonna go through and explain it right here. So let's do this right here. Let's get all right, so this is this piece of time. Yeah, this is this piece of price action right here. All right, yes, same piece of price action. All right, so right here, if you look here, right, that right there, that's your SIBI. And this SIBI right here, let me all right, so for marking this right? For marking this right here, you you would want, if you want to mark it as like how you got it, like this right here. Let's see. Sibi/BPR, right? If you're gonna mark it like that, then you would annotate it here, like this, right? You would annotate it like that if you're marking it as a Sibi and balanced price range, right? Or you could mark it like this and then mark this right here as an inversion fair value gap, a bearish inversion fair value gap, like that. You understand what I'm saying? Because this is like this entire Sibi is not the balanced price range based off of opposing fair value gaps, right? That's the balanced price range based off the opposing fair value gaps, right? So, and if you got it marked all the way to the top, then it would be the inversion fair value gap based off of this green candle, right? This green candle right here created this inversion fair value gap, right? This green candle here also created this balanced price range right there, right? So with it marked up here, right, it would just be annotating the fair value gap, the inversion fair value gap, right? This down here would be annotating the Sibi/balanced price range, right? But if you, and then if you, to make it even more confusing, right, you got sell side delivery, then you got buy side delivery here, right? So when we trade back down into it, we're trading back down into all of this balanced price range right there, because we got sell side, buy side, and then we left that area. So now we're trading back down into this larger balanced price range right there, right? So yeah, so that's the only thing that I am put as far as like if you want to call it a correction, right? That the balanced price Sibi/balanced price range, like I would just put it as BPR right here. I wouldn't even bother with putting Sibi in there. You know what I'm saying? I would just put that as balanced price range there, right? Wouldn't even mark that one at all. You know what I'm saying? Down, I wouldn't mark this one at all right there. I will mark this as the balanced price range right there, right? Overshot it a little bit, and that's fine. That's to be expected when you're trading down into the fair value gap there. You know, the first one, respect, consequent encroachment. The next time we came down, cleared out those lows. This candle right here, this first candle here was created at 2 o'clock, right? And then this second candle here was the 2:30 candle, and we swept out those lows. Let's go to a lower time frame and see what price did right there. Right, so right there, right? So right there, what we're doing here, when we swap out those lows, we're coming here with accumulation, manipulation, then we go up above the highs. You see what I'm saying? Same thing from the beginning when you talked about. So we was accumulating there, right there at that balanced price range, engineering longs, manipulated out the lows below there, and then moved up. I know all of that wasn't part of your question, but yeah, that's the only thing that I would change inside there. Either change this here where you got it marked out as Sibi and balanced price range, stretch it this way and just call it the inversion fair value gap, or adjust it down to just that area right there and stretch it out over to these candles right here, you know what I'm saying, and leave it at, and just change it to balanced price range. Or you can just don't put it in there at all and just leave your 15-minute fair value gap right there on and then adjust it from that red candle over here to that white candle right, the gray candle right here, right? Adjust your fair value gap over to that candle there, right? Because that's the candle one, candle two, and candle three, right? You just got it anchored to the wrong candle on that right there, right? But other than that, that's the only input I got for you there. So your 15-minute busy, right? Make this green, right? If you mark it like that, if you mark it like this way, okay, right? You'll have it, you'll have like balanced price range with your busy, right?
Why are you only marking that for the balanced price range?
Because this
I'm
is
sorry.
where no, you're fine. Because the balance, when you looking at a balanced price range for opposing fair value gaps, the balanced price range is the area that the fair value gaps share, right? So this SIBI is this big, right? The SIBI is this big. Okay, I'm gonna stretch it over there, and then the BISI, I'm gonna move this out of the way for a second, right? Right. So the BISI is this big, the SIBI is this big. I'm gonna change this red.
Okay, I got it.
Change this to red, right? Okay. So now, right, the area that they share is the balanced price range. So that's your balanced price range right there, right? And if I take that off and put back on where we highlighted, see, that's the balanced price range there. Last time I deleted it but instead of hiding it. So I'm gonna hide that. I'm gonna change this to red like that. Change that to red. Okay, and then you see the area they share, the part that's right there, the area they share, that's your balanced price range. And if we bring our balanced price range back, where is it? There it is, right there. Boom. See, that's the balanced price range there. It's the area that the SIBI and the BISI share. If you're looking at a balanced price range in the sense of offset and fair value gaps, you want to look at the area where they overlap, right? You're not interested in the where the wicks are. You're not interested if you're looking for the balanced price range. So that's your balanced price range. So you got a couple ways you can mark this area, right? Like I say, you can mark it as the balanced price range there. You can mark it as the inversion fair value gap here, right? Inversion fair value gap here, right? Or you can mark it as your 15-minute BISI right there, right? You got 1, 2, 3 different PD arrays just for that area right there that you can mark why price reacted there. You see what I'm saying? And this is what they call confluence, right? So if you got an inversion fair value gap trader, they're taking a trade off of an inversion fair value gap. If you got somebody trade off balanced price range, they taking trade off this balanced price range. If you got somebody who trade off of just fair value gaps, they're taking a trade off of this bullish fair value gap right here, right? It's like if you got somebody who trade turtle soups on a lower time frame, they're getting long up under this low right here, right? Just like we went to the lower time frame and we saw that we accumulated and then manipulated the lows, right? We went to the 1 minute time frame, right? And we saw right here where we had came down, we pushed up, and then we started accumulating here, anticipating price to go long. Why? We're inside of a 15-minute anticipatory reactionary point, this 15-minute fair value gap, right? When price traded below that swing low right there, turtle soup entry, right? That's a turtle soup buy right there below that low. You're inside a higher time frame anticipatory reactionary point. You're anticipating price to go up, right? We over here, we came down, pushed up there, right? Got our reaction, gave our best, then we pull back down and we manipulate out the low. Smart money buying below the lows, getting the best price they can, right? And then once smart money buy below the lows, then this right here would be your low risk buy right there. Trading into that fair value gap, that's your low risk buy to go on up. All right, and again, I know you didn't ask all that, but it's kind of hard to
No,
stop.
that was excellent. That was That was definitely
Yeah.
light bulb moment.
Yeah, so that's your balance price range. And the same thing down. Remember when I was talking about down here, I was like, you can do it if you want to say SIBI / balance price range. I like you would do it down here also. It's the same thing there, because this is the area where this SIBI and this BISI, the same BISI but a different SIBI, that's the area they overlap. That's your balance price range based off of opposing fair value gaps, right? And because this is an area where you got sell side delivery and buy side delivery, and now we're no longer in that area there, so that's a balanced price range, right? And like I say, when it comes to just sell side delivery at all, you can look at it the same way of this whole area: sell side delivery, buy side delivery, then we push up out of it. So all of this right here is a balanced price range right there. And then let's get our Fibonacci tool, right? If we get our Fibonacci, let's go to the highest
So
high
in
to
that
the lowest
run,
low.
in that run, it would hit 50% and then take off.
Right, so with the highest high to the lowest low, right, we came right down real close to equilibrium of this entire range right here. Now if we count, like if you say, okay, this candle already left outside of that range and you want to come over to that one, right, same thing, we coming close to equilibrium, right? The balance price range is like right there at equilibrium, but I always go to like the, you know what I'm saying, that's the highest high after taken out. And then actually this candle start up there, so you can even go all the way up to this one here, because this starts the way down and this starts the way back up. Like once we started leaving the area, we poked up out of it and then we pulled back into the area after going into that fair value gap there. And if you do it to that one, we even came into a discount of that range, right? But that, you know what I'm saying, it's like you can look at price a million different ways. Like if you understand like all the different concepts, right, you don't try to go in and implement everything, but this right here is an opportunity where you can see confluence, right? If you understand, okay, inversion fair value gaps, if you understand a type of balanced price range, if you understand fair value gaps, right, if you understand, you know, last down close candle in the order block, right? Because we ain't even touch on him. Last down close candle inside this order block right here, right? So it's like now you can say, okay, I got all this confluence, and all of this confluence right here, all this right here is 15-minute confluence, right? So you got all this 15-minute confluence, and if you could say, okay, I'm just gonna go in on my 15-minute time frame, that's fine, right? If you're going in your 15-minute time frame, where's your mandatory stop? Your mandatory stop is going to be here. Where's your safe stop? Your safe stop is going to be there. Why is this the mandatory stop? Because this is the candle that created that BISI, right? That's the candle that created your fair value gap, right? So that low right there should be safe. So that's your mandatory stop. You got to put your stop at least there to be safe if you're entering on, you know what I'm saying, this area of confluence with all these PD arrays, okay? Your conservative safe stop is below the low, because that's the low of the leg that created the imbalance, okay? And then now that you know 15-minute, this is my mandatory stop. Right now I can go to a 1 minute and look to see if I can get a better entry, right, based off of this 15-minute time frame, right? So I can come in here. I know this is my mandatory stop for the 15-minute. If I would, and when we trade it back down into, let's go here, right? Let's go to 15-minute real quick. We don't get to the chart prep in a minute, but this right here is when price traded into it. So we're gonna look to see, we'll go to this candle. So anytime before this line, when we dipped into this area, is when we got picked up on a 15-minute, right? So, and for anybody who don't know what I just did, right, this candle is what traded into this fair value gap right there. So if you went in after entering this fair value gap in this balanced price range, right, you enter there Your stop, your mandatory stop is down there. So this is the candle you got picked up on. So on a 1 minute time frame. So when this candle opens, that's when this candle's closed. So when we go to a 1 minute time frame, we're going to look from this line that way to see when did we actually trade into that area right there. Because in real time, price is like printing. So you want to understand, when you go back and study your price, you want to understand where was the realistic entry, what actually happened, right? So we came into that area at 209. 209 is when it first hit. Trading off 15-minute time frame, you would have been picked up at 209 and your stop would have been down here, right? So let's put a line there instead of drawing that, right? So your stop would have been and we're gonna go, I like to go 4 ticks below the low, but you can go 1 tick if you want to, but I like to go 4 ticks below the low, like 1 point. I like to go 1 point below the low. That's just me. I don't know why, but you can go, Michael teaches 1 tick below the low, because if it's supposed to be safe, if that low should be safe, 1 tick below the low should be all you need. Because if it comes exactly to the low, 1 tick below the low, you will be safe, right? Just like in this case right here, how it didn't touch that low, right? Everybody that had a stop below that, when it came right there and went back up, this right here, they felt, oh, I'm safe, right? But no, you really weren't safe. All right, so your stop would have been here, right? So let's put stop loss. I'll just put stop loss, type it out. Right, your stop loss would have been there, right, on the 15-minute time frame. So when we're looking for a better entry, so when we trade into this area right here, when we trade into this area right there at 209, that's when we drop to the 1 minute time frame looking for a better entry. Okay, so looking for a better entry, we drop to the 1 minute time frame looking for a better entry. We come down here, okay, we push back up. We did not take out that high right there. We didn't take out that high, so we're not trusting this fair value gap to push us higher, right? Well, I'm not trusting. I'm gonna say that I'm not trusting because we didn't get our 1 minute breaking market structure right there, right? So that's why I'm not trusting that fair value gap as a entry yet. Even though we're in our what's the name, I'm not trusting it as an entry yet. Okay, so then, right, we're in there, we formed that 15-minute candle closed right here on this 214 candle. It closed right there. And now looking at your 15-minute time frame, you see that we've come in and we've respected that fair value gap, right? So now you're looking for a better entry. Now that you've came here and respect that, you can mark out consequent encroachment of that 15-minute wick on your higher time frame. You know what I'm saying? Because you're still looking for a better entry opportunity. So now that you've respected that area, you watch. Now this candle opens, you're watching to see, okay, when we trade down the consequent encroachment here on this 15-minute candle, what are we doing when we trade down to consequent encroachment of that wick, right? And then we're looking at the 1 minute, right? So now that this candle opened up, here we open up here on the next candle, right? We trade down to the consequent encroachment of the wick, right? See, that's the BISI. We said that we're not trusting, right? We traded down, we're all the way down, and now we're consolidating inside that BISI right there, right? We're consolidating inside that BISI right there at the consequent encroachment of that wick, and then that candle closes right there on this 229 candle, right? So now looking at our 15-minute time frame, right, now we have this candle has just closed, right? That candle has just closed. So now, right, we got our consequent encroachment of this wick right here, right? We dipped, you know what I'm saying? Let me see, 220, no, come back here, right there. This candle just closed. I'm sorry, that candle just closed right there, right? So that candle just closed, and we're below consequent encroachment of that wick already, you know what I'm saying? When this candle closed, we're not below. This candle closed, and that's consequent encroachment of the wick that we're watching. All right, see how I'm getting confused because the candle's already printed? That's why you always want to walk through it and see like what's the real entries, right? All right, so now that candle closed. All right, okay, so there we go. That candle closed right there on the 29 candle, right? We open up, we come down to the consequent encroachment of the 15-minute wick, right? On the 1 minute, right? We have this wick right there. We're respecting consequent encroachment of the 1 minute wick, right? That's our lowest wick. That's our wick. That's our sell side right now. Our lowest wick. So now we're watching this sell side, right? We're watching, right, the consequent encroachment of the wick, watching the sell side, and this right here is the consequent encroachment of the 15-minute wick that just closed, right? We get down, we're watching that consequent encroachment for the 15-minute time frame. So this consequent encroachment, right, we want to see how price closes right on this candle right here, right? That's what we're watching for the 15-minute closure, right? So though that's not even in existence yet, yeah, when we come here we're still trading over here like this, but this consequent encroachment plays a factor when we get all the way over here at that time right there. So we come down to the low, right? We come down to we hit, go below the consequent encroachment and the low, then we immediately come back above, right? We're still inside the balanced price range. We're accumulating inside the balanced price range right there, accumulating, right? And then when we get here, we see that price goes below our low, right? And rejects off, right? Now that we got that rejection, what are we watching now on the 1 minute, right? Now that we got I'm gonna ask you, Marco, now that we got this rejection right here off of our sell side, what are we watching? Let me do this right here. Right there, boom. Right. Now that we got that rejection off the sell side, what discount PD array are we watching on the 1 minute at this time right now?
That same wick. The consequent encroachment.
Yes.
Of that same wick.
Yes, very good. You're watching the consequent encroachment of that wick right there, because when you take that low right there and reject off like that, right? You're taking the sell side and you reject off. So now this is saying the draw is higher, right? And if the draw is higher, you want to see it respect the discount on PD arrays, right? Very good. Very good. All right. I'm gonna put our meat on the bone. Go back up. That's good enough there. Okay. Now, coming back here, right? So we're watching consequent encroachment of that wick, right? We come down, and now we notice here that we're starting to respect the consequent encroachment of the balanced price range. After we wick, we come down, right? And this is a 15-minute balanced price range, but on the 1 minute, right, we come down, we close below the consequent encroachment. This candle here, we never make it back there, and then we close above this consequent encroachment, right? Close above it here, right? We close above it here, close above it there. This candle here trades down into that down close candle, right? Because if the buy program has started, the discount PD arrays and the down close candles should start to support price as we go higher. Okay, so now we're looking that we never made it there, right? The bodies of the candles are starting to respect consequent encroachment of the balanced price range, right? The candles, these down close candles here, right, respect support price there, right? They support price there, right? Then we get a wick up, come back down. So now at this time right here, right? At this time right here, if you trade order blocks, right? If you trade order blocks, here is your entry here on this propulsion block right there. If you trade order blocks, right? That's your entry there on a propulsion block. If you trade order blocks, and your stop loss would be there, right? Your mandatory stop would be at the low of the order block, right? Your safe stop would be at the swing low below the order block there. Right, so if you trade order blocks, there's your entry right there. Why is that your entry if you trade order blocks? Because if you look right here, this candle opened with a gap up, right? That candle opened with a gap up here, and since that candle opened with a gap up, right, we were already had the potential to create a BISI this big. Right, we had the potential to create a BISI that big. All right, when the candle opened, right, we got a potential for a BISI that big. So this candle opened with a gap up, which is a volume imbalance that's showing momentum and speed and strength. Right, when you start trading back down into this candle right here, right, now you want to see it, you want to think, okay, I'm looking to see if this is going to be an immediate rebalance because I'm trading back into this candle. I'm not making a BISI. I'm showing because the immediate rebalance is one of the strongest signatures in price, right? So as it trades down, right, and it trades down into this potential propulsion block right here, right? Once it trades into this potential propulsion block right there, that's why I say if you're an order block trader, that's your entry there, right? And if you enter there, you would be, like I say, where your stop would be there. And if you enter here, what you want to watch once you get into this trade is if price respects that volume imbalance right there. You don't want to see price even get back to it, but if price does come back to it, you want to see it respect that volume imbalance. If you get a closure below that volume imbalance, you're probably wrong, right? You're probably wrong about entering on that order block right there. So coming into the order block, trading with the order block, that would give you a we're gonna go to the order block price, to the order block low, right? And we're just gonna pick the same high for both trades right there, right? We're just gonna go to that high. We ain't gonna make it like super like outlandish. And then when we went with the 15-minute, this was our entry here at the touch of the fair value gap right there, and our stop was right there, and then that high right there. So now coming off that order block on the 1 minute, right, you could get a trade of a 9 to 1 trade coming off that order block to that same high, a 1.5 to 1 coming off the 15-minute fair value. Let me get to the same high. 1.5 1 getting to the 15 from the 15-minute fair value gap. And then if you don't trade order blocks, your fair value gap trade based off of this 1 minute time frame would be here. Your stop loss, your mandatory stop would be, I always go 1 point below the low, right? So let me do my thing. So the low right there is so I go to 80.51. 80.50. It was safe there with the 1 point below, right? And then you don't have a swing low in this case, but you can use the low of the order block if you want to, right? So if you use the low of the order block, right, it's a 4 0.6 to 1. If you use the 1 point below the low, it's a 5.5 to 1, right? So those are the different entries, just going back to that high based off of, you know what I'm saying, the lower time frame versus the higher time frame. Even though over here you would have gotten in much later, it's a higher risk to reward trade than using the 15-minute, right? And down here it's a much larger risk to reward trade than using the 15-minute. So this is, you know, showing how, hey, you can get in right at the anticipate. In this case, you could have got a better entry based off of the, and then if you don't feel safe trading with it like that, and you were like, okay, I want to make sure I'm safe and bring this down to the lowest low here, right? It's a 3.9. It's a 3.9, almost 4 to 1, right? Almost 4 to 1 down there. You know what I'm saying? We'll use a realistic stop for everybody who not an expert at placing real tight stops, right? This is a, you know, it's close to 20 points. For me, I ain't gonna hold you. I would have put it, if I had to enter there, the most I go is like 18 3/4. That's the widest stop that I'll use. So in a real world, if I was to enter right there on that order block, my stop would have been down there at my max stop. If I felt like I needed my max stop, but I would have put it right here below that low right there. You know what I'm saying? I would have put it below that low right there, because that's the order block and that's the swing low for that order block right there. I would have put it below that low right there, and it would have been a 6.6, like 6.5 to 1, right? So hopefully all of that babbling was helpful. I know you only asked about your what's the name right there, but hopefully,
you answered everything. Thank you so much. That was excellent.
yeah. All right. So does anybody else got anything before? And again, like if you want me to like see something, just tag me in it so I know, you know what I'm saying, you want me to look at it, or put it inside that what's the name for questions for Big Spider. Hey, the market done opened up already. Do anybody got anything else before we get started with the chart prep? Appreciate you for pulling up with the hard hit question there, Marco. I probably should turn this other thing off because they gonna probably copyright strike my video. I don't know if y'all was enjoying the lo-fi music in the background. Hey, it's been going this long, so hey, I'm just gonna let it run. If they copyright strike my video, hey, it is what it is. Let me check the chat and see if anybody says I see Robson pulled up in here. Nobody said anything, so let's get to it, man. Let's get to the chart prep. If y'all come up with any other questions, let me check the tube and see if anybody said something on the tube. Where's my hold on. Nope, I don't see anything in the YouTube chat. All right, yeah. I don't see anything in the YouTube chat. All right. Okay. Put y'all over here. Boop. Discord over there. Boop. Don't need that. Let's get to it. All right. So on monthly chart, hey, why are you still up there? You shouldn't be up there on the monthly. All right, so on the monthly chart, we see that we still haven't taken out the monthly high on the let's do this. We're gonna do this right here. I don't really trade the ES anymore, but for all my ES people, I don't wanna. You got a special place in my heart. The ES got a special, old Spylane got a special place in my heart. We have taken out that monthly high. I don't even have my TDA on there no more because I don't even be marking it out. But we have taken out the monthly high, last month's high on the ES. Right? We've taken out the monthly high on the ES. The ES, we did not make it to consequent encroachment of the monthly wick. The NQ, okay, let's get this together. The NQ, we did come down to consequent encroachment of the monthly wick, right? So I think we talked about this the other night. We did the other night. Mike, I don't know if you was on here the other night, but we talked about this the other night. We was talking about how this was bearish, bullish divergence. The ES did not make it to consequent encroachment. The NQ did make it to consequent encroachment of that wick, right? And then the Dow did not make it to consequent encroachment of the monthly wick. So we were seeing bullish divergence. So the Dow and the ES did not make it. The NQ did. It was bullish divergence there. And then the ES took out the prior month's high. The Dow took out the prior month's high. And the NQ did not take out the prior month's high. And we was like, that was bearish divergence. So right now the NQ has given us bullish divergence and bearish divergence all within this month so far. This month is not over, so we still can't say, okay, this divergence is in place, right? But since we're so far away from this consequent encroachment, we're just assuming that yes, this is just bullish divergence because we're so far away from that. And over these next 6 days, like this week plus Monday, right, anything could happen. We could just melt off and come all the way back down there, and the bearish divergence is what's in play. But since we've had so much strength over here, right, we're just looking at this as the sixth sister that's waiting to catch up and come take out the highs, the all-time highs, because we got all-time highs on both of these. Right, just looking at this as the sixth sister. How much time is it gonna, spend pulling back and go up? Is it gonna give us, right, a negative September? Right, is it gonna give us a negative September if we come back down? Don't see us coming back down to consequent encroachment of that wick right there. Right. So what's the next thing you can watch? Right, this wick here. Right, watching that wick there, because when this July wick, right, this August wick just totally blew past everything, right? And then this September wick came down to the August consequent encroachment, right? So now you'll be watching if we pull back to from the close of August, if we pull back to the consequent if we closed near the consequent encroachment of the August wick, that would give September negative 2% in the month of September, right? And that would play in line of seasonality. Oh, September was a bearish month. September was down 2%, and then that would give us, the fuel we need to start, maybe mounting a Santa Claus rally to come back up to all-time new highs, right? Just thinking from a seasonality standpoint, right? Does it have to play out like that? No, it doesn't. I don't care how it plays out. We're just looking for signatures. Those are some signatures we can be looking for. Those are some levels you can be looking to see how price reacts to. All right, so Nothing I want to mark out on the monthly, right? Nothing I want to mark out on the monthly. You can keep in mind 19,398.75, right? Keep in mind 19,398.75. If price starts to trade back down there, you want to see how it reacts around there. That's the consequent encroachment of the July wick, right? Because we haven't really given that an opportunity to, on a monthly basis, support price outside of the fact that we closed above it here, because we blew through it, closed above it, blew through it. We haven't seen like a real like hanging around that area, right? With the ES, on the ES levels, I would be watching as far as to support price, right? You got a volume imbalance here. If we was to start trading back down, if price was to start pulling back, if it pulled back aggressively, right, there's a volume imbalance down here, right there. If price pulled back aggressively, right there at 41,567, right? Don't anticipate that, but if it was to get really heavy over the next week and just die off, I will be watching to see how price traded if it came back to that area, right? But like I say, don't really see that happen, but if it does, that's the level to be watching. All right, 1 week. Okay, so let me take these new week opening gaps off. All right, hide those. All right, so on the weekly, okay, on the weekly, that's that monthly volume imbalance that's there so far, right? Let's go back to the monthly on there. Turn the settlement on. Right, so since we're looking at it as a volume imbalance, we want to make sure we turn our settlement on to get like the true size of it, right? And then go back to settlement off, right? So that's the true size of it right there. Then go back to the weekly. Now looking at it on the weekly, this is the price I will be watching right there. 42,015. Oh, that's the YM. I'm like 42. What in the world? That don't make no sense. Why y'all ain't tell me I was looking at the YM? I'm like 42. That number don't sound right. Okay, so on the ES, is there a space in between there? That closed at 1825 and it opened up at 19. There's a one tick separation there. Let's go down to the weekly. All right, so for the weekly, right, the monthly, right, this is the volume imbalance down here, right? That's the volume imbalance there, right? Without the volume imbalance, right, that's like the new month opening gap. Make up a new word, new month opening gap. But let's go to the weekly. All right, so if price got heavy, right, you want to see how price is reacting to that volume imbalance right there, that monthly volume imbalance. If price started to get heavy on the ES, right, and the price on that is 5639.5, right? If price started getting really heavy, you want to see, does this support price, right? So on the weekly, so this week coming up, does this, if this week decides to trade back down to this, do we get a weekly closure above it, right? And then as next week starts, right, does it still continue to support price? If it does trade back down to there, you're looking for your reaction on that on the ES, and that's in between 5639.50 and 5620, right? Now for the weekly high, Don't need that no more. Last week's high, last week's low. Last week's high, last week's low. Okay. Nothing else I really want to mark out on the weekly outside of the fact I had this marked out before this SIBI. We still haven't reached that yet, so I'll put it back. I had this marked out before. We still haven't reached that yet, but I'll put it back over here. I don't remember when I took that off. But I had that on there, so I'll put it back. Right, so we still got that SIBI up there that we haven't reached. To the upside, the current, we got a premium gap up. Right, we got us a premium gap up. This right here would be, let me see here. So that would be our new week opening gap there. Let me copy a new week opening gap. I'll copy this one. And then because you can mark them on the chart like this right here. You just want to make sure your settlement is turned off. Right, you just want to make sure your settlement is turned off when you mark them like this. Right, because if you turn your settlement on, right, you see how the spacing is different right there. So if you look at it with the settlement on, this is just a typical volume imbalance, right? Because that's, your typical volume imbalance between I need to go to the opening price right there. It's just your typical volume imbalance in between the New York close and then the start of the new trading day, and then the new week opening gap, new day opening gap is the 5 o'clock over the price at the close at 5 o'clock to the open at 6 o'clock the next trading day. All right, so that right there will be your new week opening gap. And tomorrow is the 23rd. I always date mine for the Monday. You can date it for Sunday if you want to, but I always date it for that Monday. That's how I do mine. And this is a bullish new week opening gap. Yes, that's still bullish. All right, and I can lock that. Where's my lock? Oh, right there. Okay. All right, I can lock that. I'll leave that one. This one kind of far away from. Don't need that one on there. This one is inside there, so turn that one off. I'll leave that one on. I'm just picking which ones I want to leave on right now. My new week opening gaps, new day opening gaps. The ones that's really far away, I turn them off. If they're close to price, then I'll turn them on. I turned this one for August 26th off because it's inside the one that we just created, so I turned it off. For the ES, Snap too. What is it doing? Cheese and rice. Okay. And what I like to do, I always put it right on the candle. I'll put it right on the candle. Then I'll go down to a 1 minute time frame and just put it on that 459 candle. All right, I'll I'll come all the way down to a 1 minute time frame and just put it on that 459 candle right there. Right, and as you see, when you got the settlement turned off, you see how it lines up right there perfectly to that 459 candle. Right, all I did was slide it over one candle. With the settlement turned off, it lines up perfectly there. And then come over to the ES, put it on the 1 minute candle. Right, squanch it up. All right, then you see there. Right, this is the 459 candle. Right, all I gotta do is pop it over one, boom, right there. With the settlement turned off, it lines up perfectly with that 459 candle. All right, so now that's locked down. We can lock that again. We can lock that again. We'll go back to the weekly. So now on our weekly, right? Let me see. I think that's all I'm gonna mark on the weekly for both. Let's look at it. Yeah, that's all I'm gonna mark on the weekly for both. There's areas that I would keep an eye on, right? The areas I'll keep an eye on would be consequent encroachment of this premium wick, right? That's 57.78 on the ES, right? Consequent encroachment of that premium wick. If price trades up to that, you want to see how price reacts to that. And then you got 20,109.25 for the NQ. If price trades up to that, you want to see how price reacts to that premium PD array. And yeah, that's it for the weekly. That's all I want to mark for the weekly. Let's go to the daily. Go to the daily. Okay. Go to the daily. Daily high, daily low. All right. Don't really need that right now. These are prior lows. I got that inside my TDA. That's a prior high. On my gaps. All right. Okay. So daily high, daily low. ES. Daily high, daily low. From Friday. Okay, daily high, daily low from Friday. Now, on the daily, right, so that CE of that weekly wick is just above the daily high on the ES. All right, and CE of that weekly wick on the NQ, slightly above the daily high. Also, it's a little bit higher above the daily high on the NQ than the ES. So you have that weekly CE up there, and you have a daily CE up there that you can be watching, right? Got a the daily consequent encroachment for the ES is 57.86, right? But you also have a potential immediate rebalance on both, right? Because both of them traded back down to this candle's high, when you had a potential to have a BISI this big, right? You had a potential to have a BISI that big on the NQ, right, when this daily candle closed, but then we came and traded back down into that candle's high, right? So watching to see if this will become an immediate rebalance. What you want to see if this is immediate rebalance is you're watching this consequent encroachment of this discount wick, right? Now here's a little game from throwback ICT, right? When you have wicks that overlap like this way here, where it could have been an imbalance, right? Where it could have been an imbalance there. If you take the consequent encroachment of this wick and the consequent encroachment of this wick, right? This area right here is what Michael calls an implied fair value gap, right? So you got an implied fair value gap on the ES right there, which is 57.46 even down to 57.28.50, right? So 57.46 to 57.28.50, that's what Michael calls an implied fair value gap, right? So you're watching that consequent encroachment of that wick, that's the high of that implied fair value gap right there. So you'll be watching to see how price reacts there, and you want to see on a daily basis price with the next, like today's candle and at least the next candle getting up away from there, if that is to be used as an immediate rebalance. You don't want to see it hanging around in here, because the immediate rebalance, you want to see speed away from there. Okay, that's what you're watching for that. And then if you look at the same thing on the NQ, then that right there, that wick right there, your implied fair value gap would be in between 19,937.75 and 19,793.50, right? That's your implied fair value gap right there on the NQ, right? That's throwback ICT. That's the stuff that be buried deep inside them Twitter spaces when people be like, I can't listen to him. That's the stuff that be buried deep down. All right, so for the daily, don't want to mark out nothing. If price starts to trade lower, right, I want to see the reaction off of 19,937.75. If price starts to trade lower, I want to see the reaction off of 57.46. If price starts to trade higher, right, I'm looking for the reaction off of, first I'm looking for the reaction for the NQ. Since the NQ has been so heavy, right, the first thing I'm looking for the reaction off of is 20,075 even. That's consequent encroachment of last week's wick, because the NQ has been super heavy, right? And then if we push above that, then I'm watching consequent encroachment of this wick here, because we never made it there last week. That's when I would be looking at 20,133. But for the NQ, the first thing I'm looking for is that 20,075 if price starts to pop. Okay, but I'm not marking anything out. Just gonna, those are the levels that I would be keeping in mind, right, for the upside and the downside. Let's look at what new day opening gaps I want to leave on. This one is far away from price, so I'll revisit that if need be. We have two right here. I'll leave the larger one on, because the smaller one is toward the top of the larger one. So You know what? I'll just leave both of them on there. I'll leave both of them on there. And then this one here, that's today. That's today's new week opening gap. And yeah, I think that's it. That's all I'm gonna leave highlighted. All the rest of the stuff, that's today. I'll leave that one. Take that one off. Take that one off. Take that one off. Take that one off. That's the one I said I'll leave. And I said I'll leave that one. Yeah, so those are the only ones I'm gonna leave on. That's the stuff that's trading close to price that I'm interested in. If we start getting animated, then I'll add the 22nd, like August 22nd, back on. If price starts getting animated August 22nd, I'll put that back if it gets animated to the upside. But if it does get animated to the upside, what I'm looking at first is consequent encroachment of that wick, right? So that's what I'm looking at first. And I think that's going to do it for... Yes, I think that's going to do it for the chart prep. And then if anybody wondering what that is that I turned off, that one that says prior day high, this one here, right? If you are throwback gang, you will remember back when I used to be doing all my charting on Ninja Trader, I used to always have the high and the low for the last 3 days on my chart. I used to always have the high and the low for the last 3 days on my chart. And this right here, as you see, that was like the high from Wednesday. So looking here, right? So Friday, that's the high and low already marked there. Then you got Thursday, that's the high already marked. We're so far away from the low, I'm not wasting my time marking that. And then so that's 1, 2, 3, and then Wednesday's high, and we're so far away from the low, I'm not bothering marking that. But the high and the low from the prior 3 trading sessions, probably 3 trading days, those are like good pools of liquidity and good day trading targets and anticipatory reactionary points, right? So that's what that prior day high is right there. And it's marked because that was a prior day high from like over here, like on Friday and Thursday. Excuse me, like on Friday and Thursday. That's why it was already marked when I came in, right? But if you remember back when I used to chart on Ninja Trader, I used to always have the prior day high and low from the last 3 days marked out on the chart. And that was, you know, something from IC Tizzle, who teaches that. What's that there? Clean up some of this stuff that I don't need. Clean up my charts. Y'all know how anal I am when it comes to my charts. I be wanting to be right on the right candle. I be wanting it connected to the right candle. So at this time, while I'm like tightening up my boxes and stuff, if anybody has anything, feel free to unmute and ask your question. If you're on YouTube, feel free to type it in the chat. I can't. What? Sign in the chat. I can't even see. I don't know if anybody put anything in the chat because it's saying sign into chat. I don't see nothing. All right. I don't know what's going on with that. I don't know what's going on with that. So, if someone, what up, P, just woke up from my nap and noticed that 10 was flat. August week dropped right to the bullish monthly fair value gap in reverse. Had another small monthly fair value gap around. Ain't nobody ask you for your commentary. If you still in here, ain't nobody ask you for your commentary. Shout it out. Shout it out. Yeah. Okay, can't go back that far on that. Okay, dope. That's it. I ain't had nobody. Oh, wait a minute. That's it. I ain't had nobody.
Can you show the divergence from the three sisters?
No. Hold on. Which divergence? We talked about bullish and bearish, and I showed both of them. So which one you talking about? D.
Hello?
Which divergence?
Between YM? Can you hear me?
Yeah, I hear you.
YM, NQES.
But I'm saying which one, the bullish or the bearish divergence? Which what are you talking about? Which one you want to see? The bullish divergence was based off of the fair value gap, and the bearish was based off of the highs. So which one you talk about, the bullish or the bearish divergence?
The highs.
All right. All right. So we were looking at our weekly charts right here. All right. So we was looking at our weekly charts. All right. So looking at our weekly charts, we're looking at last week's price action. All right. So we're ignoring this little candle that's starting right there. We're ignoring that candle. All right. And matter of fact, let me do this. Just gonna take that little candle off. All right. So we're ignoring that candle, and we're looking at last week charts. And you see here, right? Come on, right there. This is the NQ down here. All right. So we're looking at this relative high because it's a different high on the NQ than it is on the ES and the Dow. Right. The swing high look like it's a different one there, but this relative area there between all of them, right? Looking at the Dow, right, we made a higher high for the week. Looking at the ES, we made a higher high for the week. And then looking at the NQ, we failed to make a higher high on the week. And that right there is the bearish divergence that we were looking at right there. And then we was looking at the wicks of the we were looking at the wicks to the lower end between the looking at the monthly wicks between all of them for on the lower end, right? So look on the monthly basis. This monthly calendar isn't closed yet, but we were looking at the wicks where the NQ has come down into that monthly wick. The ES has not come. The ES has not come down into the consequent encroachment of that monthly wick, and the Dow has not come down into the consequent encroachment of that monthly wick. So that was bullish divergence between the three, because we had a discount PD array that they all came toward, but these showed bullish divergence because it didn't quite make it there. All right, so that's the divergence that we were talking about between the three sisters.
Yeah.
Do we have anything else from anybody? For some reason, I'm not seeing. If anybody typed anything on YouTube, it's giving me something saying about sign in, right? Sign into chat, and then when I click sign in, it says this action can't be done through this. So I don't know if anybody has typed anything over there or not. So, matter of fact, somebody that's on YouTube, do me a favor and just type something in the chat. Let me see if it pops up anyway. Because I can see it on the screen. I should be able to see it on the screen, but I can't see it in the chat window. Where is here to learn and share when you need her? All right, man. That's it. Y'all enjoy the rest of your evening. Yeah, it popped up. I can see it. No one is typing in chat. Okay. I can't, it's telling me to sign in to chat, but I can actually see it over there. So I guess I never paid attention that always says sign into chat. I guess that's always been there. That's for if I want to chat with y'all. Because if I do that, it gives me that, right? And I hit open browser, and then it opens this window right here. Yes, that's what it is. That's if I want to chat with y'all. Yeah. There you go. Okay. I just learned something. Mentees tomorrow is going to be a tape reading session, but since I stayed up late Wednesday night and did not do the tape reading session with the rest of the gang, I'm going to the tape reading session tomorrow with the mentees. Everybody, all of the gang is invited for that tape reading session, because I told y'all we was going to do a tape reading session last week. I stayed up late Wednesday. I didn't get to bed until like 3:30, 4 o'clock, and I wasn't trying to get up and watch no candles Thursday morning. So so tomorrow we'll just do the tape reading session with the whole gang tomorrow, to make up for not doing the tape reading session last Thursday, right? If any of the mentees got issue with that, hey, these your brothers and sisters, man. I told them I was gonna do it that last week. Y'all, hey, man, and I don't care anyway. What's going on, Mikhail? What's up with you? Yeah, so that's what we doing tomorrow. Tape reading. Pull up. We'll start at 9. Right? We starting at 9, but I'll be in the Discord at about I'll be in the Discord at about 8:45. I'll be in the Discord about 8:45 if anybody got anything. But we gonna get started at about 9 o'clock. So I'll see y'all then. Anyway, man. That's all I got. Y'all enjoy the rest of y'all evening. I appreciate y'all for hanging out with me. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. Y'all know who it is, man. It's your boy, Aranya Grande. That's Big Spot if you don't hablo Espanol. Y'all be safe out here in these trading streets, man. Gone.